Everybody they own boss. They all getting this money. All right. Well, we got some pretty nice news play that has taken place. The Tokyo highs are just clean for the news to liquidate it. You can see if we were to cut off the 936 here for a second before the news happened. Here's your 936er. Got a nice 1, 2, 3 at the bottom of the sessions. Then you can see Tokyo's high right up here. Go straight for the liquidity with the news and then plop straight down for a nice close. That was too good. Very, very clean picture. If you would have been in the 1, 2, 3 for a take profit at the highs, still fire trade. Or if you took the sell from the highs, knowing that this is liquidity, slap down, also fire trade. 936 is a very powerful condition, but now we are a bit outside of it and trying to get back into it. So you have this purple level here as London low and New York low. We're currently just rejecting it, but this is all the news, right? This big candle here. So if we were to expand this consumer range box, you can see that's about 50% of the news. So it's kind of like a retracement that just took place. So now we're kind of stuck in a range in order for price to articulate if it wants a higher or a lower liquidity grab. So we did come from the low here once, twice, right? So a lot of this discounting push might come with some pops until the trend is actually started and then pushes us into new price. But until then, there's nothing truly that we can articulate. We have higher time frame stuff, right? 936s and all that junk. But for now, like lower time frame trends is all that's going to really compute. You can see the order block here, 1 hour, and you have big order block here, which we're just basically in between. So based off of how price starts pushing through each, will give us maybe some more data to help us either take the trending ideology or to understand that maybe this daily isn't really supposed to move past what it's already created. So what I mean by that is here's the highest point of the day so far, and then here's the lowest point of the day so far, which means if technically this doesn't have to do anything, it could stay right here inside of the daily range. So anytime it gets really close to here, you'll probably get like a 1, 2, 3 setup for a bounce back to the mid. Anytime it gets too close to the highs, you'll get another push down back to the mid until the day closes for the next 6 hours. And if that doesn't make sense to you, then you can look at these daily candles over here. Same thing, right? Here's a top and here's a bottom. That's a whole day, right? There's plenty of days that will do that, especially after days that have just got done running. So you can see 2 previous days are just straight runs. So this day could technically be just consolidating and ranging, maybe setting up something for tomorrow. So cool thing about trading is you do not have to trade if you don't see something worth trading. But since we're on Zoom, we can definitely go over how this day can move and how lower time frames can articulate price for us. So I'll sit here and pop up some trends and some boxes, and we'll watch interactions, and I'll display entries on the screen, so that way you can see it. But ideally, understand that 936 has already been exercised very well, and that daily could potentially have a daily range. So from the perspective, we'll put the daily range on, which is this top piece here, purple level, and then the bottom piece here. And then we'll watch the trends articulate price and see, does that actually make sense? Can we stay in the range, or is this actually presenting something that might cause a breakout? So we'll stick around for a bit. But if you're not interested in trading things outside of the confines of our strategies, then definitely take the trading day off and then just get back to it tomorrow. But for now, we'll kick into some of these things. If you guys have questions as the Zoom goes on, feel free to say what's up. And I can also open the mics up as well if you want to tune in at any given point. So, but for now, we'll just put some boxes on here, put some trends on here, watch price move, and talk about it, why it should do what, and hopefully it connects some things for either A, things you had questions on, or B, just never been introduced to. You might pick up a gem for yourself. So, just get to it. So here, we need to map out the consumer range. So consumer ranges come from these large runs. So you can see a run happens. Every time a run happens, you'll get consolidation afterwards. All right, that's how trends work. Run, consolidation, run. You'll get maybe consolidation is for a elongated period of time, or maybe it's just something short. On a smaller time frame, it'll be technically elongated. So here's our most recent run that we can use for a box. And then we'll mess around with it. You can see the fair value down here, right? This is the fair value and how it uses it as like kind of like a cup, pushes off impulsively. New premiums are here. Wonder if I can use this instead. This is kind of like a Fibonacci that I have set here. Hold on. Huh? All right. All right. Kind of like a fib. Got the tops and the bottoms. You can see the red level here. This is the 78 level of the fib. I personally just like using it like this because it looks cleaner than the fib. Although we could probably make our fib clean. Probably give her a shot while we wait for these things. All right, so I just fixed the fib to try to articulate how I like to look at consumer ranges. All right, so I'm not sure if this is too many lines for us. Hopefully it's not, but we'll articulate it properly in a second. So the string starts from this bottom here, ran all the way without being interrupted by any other candles. So I extend that across like this. And then inside of this pricing here, while the string is created, right, top and bottom, we technically will push back to fair value, which would be the 50, which is where this yellow is. But we, as traders, when we talk about it in our course, we like premium and discount perspective. So yellow is a bit much, could be a good discount, but technically your best discount would be in this green zone here. And then if it goes back to the white, technically it could fall out of the low, which could be dangerous to buy. So you always want to keep your buys in the green. If it dips into the white and comes back into the green, like you should be seeing this kind of like a cup and it could take off from there. So ideally, you don't want to buy anything in the red. You would want to short the red, right? Because we expect this to go down to a fair value. But you can see it's failing the red here, right? It can't get back up into the white zone. So if we were to short this, because it can't get into the white zone, we don't want it to go break above those highs. If it breaks above those highs, then we need to get out of our position. If it can't seem to break out, then it needs to go back for fair value. There's fair value. We can't technically guarantee that it will go down for the deeper discount just yet. All right, hangs out on the fair value, then goes for a deeper discount. Here, you should ideally see your 1, 2, 3s exist into those discounted areas like this. So you'd be looking to average into this, right? So you get your one position there, try to keep the average inside of the green. And if it pops back up to fair value, you know, okay, cool. If it can hold fair value, we could potentially run to those highs. If it can't, then it might push in for our white zone there, which could maybe stop you out. Now you push back into your white zone. Technically, you can break out to the highs, but you're not sure. So if it can't hold the red area, now you're inside of the range, right? So you can see here, can't hold, now you're inside of the range. So that'll be out of that position as well. From there, you can't really guarantee anything else until you either get a deeper discount, meaning these lows down here, or you see an actual breakout of the top, and then you'll be able to start seeing a trend. And that trend will help let's say if you grab some kind of level from back here, and then you see the level that it gives you here, and then you extend it across like this, and then you'll have a trend to use. And then that trend will be able to articulate properly. Is this a live market right now? Hey, say less. All right, cool. So you'll see that trend start taking place if you actually get a discount and turn around, start running to those highs. But we didn't get that yet, so we're chilling. But this is what I visually see every time we put on a consumer range. So when we put that box over price, right, here's a top, here's a bottom, you should be able to have that in your brain to know that above here is the shorting area, down here is our buying area. So if you get a 1, 2, 3 into those buying areas, you oftentimes can take the buys back to the white red levels, right? The 78 to that 100 area. And that's how you trade like the ranges ideally. But it's what we're getting now. So just going to sit here, like we said, watch it react to all the different things and see all the potential opportunities that take place within just one range and just how much money is actually in here. So oftentimes when we get one discounted price, we want to dig deeper than that discounted price. And you can see here, this wick technically just dug deeper, which means it has the capabilities of pushing higher. Right. There's an order block in the 78 level as well. So if it does push higher, it would probably stop there and go for a deeper discount. If it can't push higher, it'll keep rejecting the yellow and then eventually dump for a new bottom. So when you guys watch the course and hear about premium and discount, does this kind of fit what we talk about? Does this actually fit in your head? The articulation that we usually are trying to go for when we say like, hey, sell at the premiums, buys at the discounts. You can see we're failing the yellow areas, which means technically we might actually go for deeper discounts here if we keep failing this. So just for articulation purposes, I'm going to put us a little sell inside of the orange, aiming for a deeper discount. If we don't get a deeper discount, that means we're in an uptrend. And then that's when we can start throwing this on there. And you'll see what's called a trend correction. So that means it fell outside of the trend and needs to continue back into it. It didn't even pick us up for the sell opportunity. But ideally, we would have wanted it to go back in the orange real quick, blast down like we're seeing at the current moment. So now that it's already done it, we can't just leave our orders there because it's already did what we wanted. So next trade. Yeah, quick plug as well. They have this little anchored VWAP. It's pretty cool. If you slap that on, you'll have all these deviations. And this kind of gives you that warm and fuzzy idea of saying, hey, it's at the bottom and it's on the discount. I could potentially go for buys here, expecting it to not go below this green VWAP. But that's a whole another course perspective. But it's a very interesting tool to use in order to gain confidence on a discounted area or a premium area. So you can see here it's rejecting the yellow zone, which could cause us to go outside that bottom. But if it holds the green zone, then we know that we should start pushing towards maybe the red order block area. Maybe that's a trend correction. If not, lower lows are coming. I'm going to make this trend look a bit simpler because all the lines in it are kind of wild. And I can imagine that looks crazy on your screen. We'll just do 2 solid lines. So you can see the trend trying to articulate itself, right? We could have got lower lows on here, but we didn't get lower lows. So if we do get a lower high somewhere in the red, then we can get a lower low, more likely than not, which would be a downtrend instead. But for right now, based off of these characteristics and the way that the discount is being bought, we could potentially touch higher premiums, which would put us up into this area of the trend, which is ideally like the maximum take profit that we would be looking for if we were in this position currently. Where's the projection tool at? So this area is what we'll be looking for. So we want that higher high, right, based off the trend. So if we can get this thing to shoot up or grind its way up there, it doesn't matter how it gets there, but it just needs to end up there. Then if we get candles to start closing outside of our discounted areas, right, which is here, then we'd want to cut the play and reassess. If it consolidates here, it would give itself a position to start a new string that could potentially push us down. pretty swiftly. So there's our orange level here. Technically, this could push us down, articulate another test on the green, right, or the yellow zone. But ideally, we don't want this to consolidate here too long, because if this is an actual trend, we want to see some string come out of it like this. If not, then we're in the position to get a lower high, which could potentially make a lower low very fast. So the longer it consolidates here, maybe it looks good, maybe it doesn't, depending on the way it consolidates. So as it continues to consolidate, we can decide if this is actually going to hold or not. Or you'll see one fat candle go straight down and close, which means we'll have a downtrend instead of an uptrend. When you start mixing the 936 into this mess, if you actually had the levels at least, 936 would be in here, meaning you would have like fair values and all this stuff as like very important levels. But right now we don't really have those. All we have is like these Tokyo lows, London low and New York low that we can't get above. So if we go back down to our time frames, you'll see that the premiums of this particular range are all failing the lows of the 936, but they're not making like newer lows, right? Ideally, if they didn't want the 936 levels, we should be dumping for like crazy low levels, like the daily lows. So if we wanted to get back into the 936 levels, they're going to need something down here to cause the nice string to push us back into these areas. You can see we're back in the discounted area, and this could start the string to push for the new low here. You can see there's also a pretty nice base. So this would be an averaging point. If it can hold here, you would just add more to your contracts, and you'd want to see it actually hold the trend line itself. And then stops, you don't want to be involved in the trade, but really nice average in, right? We got the initial break, got the retest, got the entry again, pushing into the areas that we wanted. Technically, this is your safe take profit. There's an order block here and a 78 level that can cause a very fast, sharp push down. But if we don't get that push down, we actually get back above the 936 lows, which could potentially start a trend that could be parabolic and run back into the 936 levels. So check out this purple line here. Purple line is the 936 levels, right? So technically, if it does push down, we're not allowed to get below the orange zone now if we want to stay bullish and actually go back into the 936 sessions. But that red zone was take profit, as you can see, tapped really nicely. But I'm going to keep our position on here, again, just for visual purposes. All right, so another thing here, check out these candles. Technically, that did close a higher high. So we have all of this room here, all this room to make any lows that we want. So it can come all the way back down here and then shoot higher for the trend if it still wants to keep an uptrend. If it doesn't, then you'll see a string blast all the way down, make a new low.
$20,000.
So this is, again, the Tokyo lows, New York lows. So we can still definitely hold it if we want to go into the 936 stuff. But you'll see that we'll play a lot in the area until something is grabbed properly and closes properly. So for now, we'll let the market articulate what it's got going on. And then from there, we'll push into something else. But for now, like that's truly all I can deliver with the data that we have been given. So now we would need it like a readjustment. So I guess we'll give this candle a second. If we can close outside of this trend, maybe in the yellow zone, we'll throw something new on the chart. But for now, I want to see what this finishes up with. So that way we can talk about it in the end, because hindsight is going to be nice. Because right now, like I'm absolutely clueless where this is going to go. Because I mean, it only goes up and down. But at this point, it should have technically made our lower high and then pushed for a nice parabolic run. So like we said, we didn't want it to get into the orange zone, and it did. So now if it can't get back above the purple line and the red line, it'll keep failing it, and then we'll end up getting a nice string down. And we don't know what that's going to finish up, right? They could maybe finish for a deeper discount, maybe yellow trend line here, maybe. There's just too many different variations that can potentially happen. But at this part of the trend here, like we already saw, we've already been to all the tops. So if there's the discount and the retest, then like why can't we go back to the top? You know, with a deeper discount, you usually get a higher premium. These are all the premiums, and that's the discount that we had. So with the deeper discount, we were able to get the highest premium of them all. So now that's all we can guarantee based off of the actual consumer range. The trend is still valid because obviously we didn't get a low yet. So ideally, if we already took profit from the initial entry we had one entry here after the break and claim, then we had another one on the retest, and then we had the run for the take profit, and now we're getting retests. So that means anywhere in this zone here, how the hell would I draw this? I guess like anywhere here can be the lower low for a new entry, and we can use the profits that we made to like reinvest, even though it is higher and outside of our discount range. But if you don't have profit on the day, I wouldn't just buy this because it's technically not on the discount, which means it can sweep all the way to these lows, and then you take a fat loss for no reason. So when you start pushing too far into your consumer range, it gets risky because now you know they need to make a decision. Are they going to go for the higher highs or are they going to go for the lower lows? And you can tell just how fast that'll happen when you see it. And then you'd be like, fuck, like, why did it just drop like that? It's dropping like that because it's been here for too long, you know? So oftentimes you ever got caught in a trade where you press the button and it just keeps sweeping down lower and lower and lower. It's probably because it already articulated price for you and made its decision that it needs to go to something else. Does it lead you guys to any questions or just truly watching it just to learn? Cool. Just making sure. I don't want to keep running my mouth past things if you guys aren't really secure on it all. All right, so we're in that position we spoke of earlier, right? Where we had this lower high experience would need to be made. Otherwise, you're going to see this push down very fast, more than likely to those lows. Yeah, after a run up, it ranges in the premium discount for sure. But the goal, so let me explain it to you like this, so that way you don't just think that that happens at all times every time. Because technically, if a market is trending, the premium and discount isn't going to last this long, right? If it genuinely wanted to get somewhere, you maybe would have only got two discounts, and then it would have ran for even higher, right? So let's see a more parabolic trend that you can articulate this with. So for example, you can see here, right? Break and run, consumer range, run, and then it didn't like the parabolic run. So then you got another long range experience. Whereas if market was like super trendy, which has been like the last couple of days now, see if we can find one. All right, cool. This looks very trendy. So here's like a really good uptrend that we'll talk about just for a moment, and then we'll get back to the shits. Here's a run. Here's the range. Then you can see it take place. And then you can see like another string. And then you have this aimless run that you can't really tell if it's going to keep running or not. This fucks a lot of people up. And then after you get another string, then you'll get another range, another string, right? Very ugly trend, but it isn't always super articulate the way that we're looking at it, unless you had like market intention. Market intention looks like really nice candles. So for example, this is really nice, right? Clean run. So with that clean run, you kind of can tell, all right, cool, that must be the trend. So then you'll have these interactions that take place. On a smaller time frame, it can be a bit misleading unless you know exactly what you're looking at, whereas a higher time frame would look a lot better. But I'm sure we'll see something here soon that might put that together for us. So you see how we slid straight through where we were supposed to buy, broke under the trend, retested it. So now if we don't make a market correction, meaning with this discount, we push back up to fix the trend, then this could potentially fall for a lower discount. So you need to see a very impulsive run here, like strong push back to like the red zone. So you can see the break, retest, right? Pushing down, discounts. And then this was what was our protected entry. And by protected, we mean you can see one touch, two touch, and then the sweep, and then the retest. So if this doesn't start a market correction, then you'll see the impulses start pushing down for a new string. Market correction looks like this. Nice string that runs up away from the area that it doesn't want to fall from. And then now with this data, once we get like the actual candle to close, we might be able to fix the trend. Yeah, very nice correction. That's what correction looks like. Correct. And it happened perfectly in the discount too, which is the norm, right? I like the trend line we had earlier, so I'm gonna just put that back. Yeah. So now you can ask yourself, with all of these discounts, it may not be deeper, but it could potentially get us the highs. So the daily range, as we established, the high, the low, we already ran all the way from the low. We caught some fire plays from the low as well. I think we caught this run all the way for about 15 bands, somewhere in here. And then we caught the mine sweep after that, about 5. I mean, technically, we could have kept our original position. Probably would have been up like 30K right now, but not terrible. The market's cool, man. It's the only place you could really make this much money just chilling, sitting in your house. Yeah. Cool. All right, fellas. Probably leave the market to its madness. It's a good chance it'll just creep all the way to the daily highs there. But it's hitting 12 o'clock. So usually that's a very, very low volatile state. So it either creeps to that level on its own, or 1 p.m. come around and put some volatility into the market. So, but you guys got questions about anything, we can run through them. But other than that, I mean, trading day was pretty fire. Had some really good entries and some good articulation of the charts. So I'll be cutting up some of these videos and putting them in the database. So if you guys wanted to rewatch them for any particular means, or to see price action move the way that it did, then I'll make sure to put it in the Discord and give you guys a link to it. Cool. All right, family. I'll get back to y'all tomorrow, last trading day of the week. Hopefully we can get some more bangers pushing on us. But for now, I'm gonna clock out of here. All right, buddy. Peace.